In this juncture, I am going to discuss about what is retained earnings. So retained earnings in definition is a net income that a company retained for the use of the business. So it is also a part of the shareholders' claim on the total asset of the corporation. We do have the net income that increases retained earnings and the net loss that decreases the retained earnings. So a debit balance in retained earnings is identified as a deficit. So we do have restrictions in our retained earnings. First is the legal restrictions, second is the contractual restrictions, and lastly is the voluntary restrictions. So we do have the corrections of errors that treated as prior period adjustments. So it would be resulted because of the mathematical mistakes, the mistakes in application of accounting principles, and oversighting or misusing of facts. The adjustment is been made in the beginning of the retained earnings. So for example, we do have a transaction for the whole year. We should be adjusted our prior period adjustment in the first day of the year, for example, in January 1. Consider this scenario. We do have a balance of $1,050,000, net income of $360,000, dividends of $300,000. So all in all, we have a balance in our December 31 of $1,110,000. But before issuing the report for the year ended December 31, 2011, you discovered a $500,000 error of net of tax that caused the 2010 inventory to be overstated. Overstated inventory caused COGS to be lowered and thus the net income to be higher in 2010. Would this discovery have any impact on the reporting of the statement of retained earnings of 2011? So, we have here the prior period adjustment, the error of corrections of $50,000. So, it was said that it was overstated. So, meaning if we overstated, because from the previous slide, we tackle about the adjustment was being made in the beginning of the balance. So, the beginning of the balance here in the January 1 is $1,050,000. So, meaning we subtract the $50,000 in the balance of the January 1. So the balance of January 1 as restated is $1 million only. And next, the net income of $360,000 and the dividends of $300,000. So the balance of the December 31 is $1,060,000. So it do have changes, or it reflects on the reporting statement. It has an impact from $1,110,000 to $1,060,000.